Hello, this is the Chart Profit video, approaching 2 hours into the trading day on Friday 10th of February. Look first of all at the pre-open. Here's the commentary. We're looking here at the profile for the E-mini S&P. At the top here we're looking at previous comments from the pre-open last Monday, and we talked about this level here, 2281. There's a very minor half range off the recent high, and we'd noted here that Friday's value area was printed above that level. Said on Monday's open that the E-mini needs to hold above that level to maintain a strong price location. So we saw Monday's value area and Tuesday's printed above that level, which is the dotted line here, and then on Wednesday the session low was exactly on that level. In the longer time frame, we know the first level support 2265, the 4-month point of control down here, previously held, so the support levels are working really well. That's usually a good sign. If we look here on an hourly chart, here's 2265, which is our first level support in the slightly longer time frame, and that held really well coming into early February. We rallied from there, from this previous high here. We can run a halfway point, which is that dotted line in the middle there, which we did, and as I've just mentioned, this supported exactly on Wednesday this week, and the E-mini has come strongly higher. This level now is annulled. We can't use that anymore because we've exceeded the high that it was based on. One thing we can say that is this proven support now at 2265, this point of control, price below that level down here would be an indication of weakness in the slightly longer time frame. We're seeing none of that at the moment. Looking here at the breadth indicators on the New York market chart through Thursday, these two indicators holding above their important levels. Net new highs 25, 5-day moving average holding above 0, and this number here, which is the percentage of stocks in my New York list printing above their 50-day moving average, that's above 50, and so on the pulse chart that gives us this green bar in the middle here, which is positive on the New York daily breadth bar here, and on price at the bottom, the price momentum or price oscillator above 0, which is trend up, and currently we're heading up as well. There's a hell of a divergence going on here with price, but as long as the price momentum keeps heading higher and is positive, this looks like a pretty healthy pulse chart. It would be good to see a little more green on the chart as well, which would be significant buying marked on the profile. This is the spider chart daily. This level here is the 2-month point of control, 226.16, and you can see it looks like we've had a higher low just above that level, which is a good pattern. So again, in the longer time frame, price back below 226.16 would be an indication of weakness, and we're currently breaking out to new highs. Coming into this week, one of the key charts we were watching was the IWM, the Russell 2000 ETF, and the 2-month point of control at 136.70. We're just at the end of this week printing above that level, but you can see that this is a lagging chart just from the pattern. We're still in the range here, but at least at the end of this week we're printing above that level, which puts it in a stronger price location. We'll continue to monitor this chart going into next week. On the FTSE 100 chart, the UK FTSE 100 chart earlier in the week, the 4-month point of control migrated slightly to 71.74. That is a perfect position as far as I'm concerned in terms of the distribution. This may be the beginning of a new distribution moving higher now. It's in a stronger price location, but that wouldn't be confirmed until we break above that level there, the previous high. But what we can say on this chart is currently is in a strong price location, but price back below 71.74 would immediately put this chart in a weaker position. If that happened, I would expect more downside. The other key chart that we talked about in last week's video was on the DAX, 11,577, the 3-month point of control, and it looks like the DAX is going to finish the week above that level again in a better, stronger price location. So these levels need to hold. If we start to see them again breaking back down below these minor points of control, that would not be positive price action. We'll look at the sentiment indicators. We'll look at the RIDEX assets ratio, my version of the RIDEX assets ratio. That was slightly lower on Thursday at 10.05. But as I said here, last Thursday's ratio, that was a week ago, at 12.15. 12.15 was the highest since May 2015. You can see that here on the chart. So anytime the RIDEX assets ratio hits a multi-month high, it is definitely worth noting. It indicates that the retail traders are moving strongly into the market. It's not usually a good sign. It doesn't necessarily mean there's going to be an immediate sell-off. It can just indicate possibly that the upside from here is limited. Just a couple of caveats with this kind of signal. Let me show you this current one. Okay, well, first of all, bear fund assets, as we know, are an extremely low level. That's in keeping and fine with a new high in the ratio. But currently, we can see that the RIDEX bull fund assets that I follow, so although the ratio is high, we're not seeing yet at least extreme assets flows into these bullish funds. You can see levels here recently much higher from here in December when we saw the outflow here. That was the point where the market picked up again. So we'll watch this indicator closely. Just lastly on this, we can see the total assets that I follow in the RIDEX bull and bear funds, and that again is relatively low. So if we move from what retail investors are actually doing to what newsletter writers are actually saying, there's a clear sign here of extreme bullishness entering the market here. We're seeing the bulls percentage this week in the Investors Intelligence at 62.7%, and that's the highest bulls percentage since December 2004. It's quite an extreme. Again, doesn't necessarily mean that there'll be an imminent sell-off in the market, but it usually indicates that bullish sentiment is growing to a level you need to be aware of and watch. Historically, this level of bullishness will usually precede the point, maybe by a few weeks where the market does sell off, but it usually indicates a sizable correction at least is likely. This week in the public poll from AAII, the bulls percent was higher at 35.8, but we know that 2 weeks ago the bulls percentage fell to 31.6. That was a 12-week low. Bears percent was lower at 27.7, down from previous week's 34.2%, which was a 13-week low. So just last week, a couple of weeks ago, bullish sentiment took quite a dip. In fact, there were more bears than bulls, as you can see here with that histogram below zero. And Lipper US fund flows reported equity funds, including ETF, inflows of 2.4 billion this week, the week to the 8th of February. Not huge, but a positive flow. I tend to put more weight and follow the 4-week flow in black here, and that is not at extreme levels currently, kind of neutral. Okay, and we're now looking at TLT, the T-bond ETF. You see marked on the screen there the major point of control at 119.60, and that's a shift, a slight one but significant. Reason being, as you know, I check these controlling prices based on samples from various time frames. What I did here earlier today actually was look back on a half-hour basis. Went back, checked if the major point of control correlated with the level based on the daily chart, and in fact it didn't. It had moved, it shifted slightly to 119.60, and so I'm moving the major point of control, the major support level now to 119.60, and as you can see, TLT is actually printing above that level. So from this we have TLT in a strong price location, and just to remind you, this dotted line here, dashed line here, 117.15 was the previous major point of control, and it was certainly at this point where we found support, and in this area here on a half-hour basis the point of control shifted higher to 119.60, and we're above that now. So this kind of looks encouraging for bonds. That would be immediately thrown into doubt if we start seeing price printing back underneath 119.60, but right now strong price location for TLT. As I mentioned previously, United States Oil Fund USO, the major moved up from this level up to this level here, that red line, which is 1144. That is the major. We've been oscillating around it for a few days. Currently at the end of this week, oil printing above that level, so again that's a strong price location if it holds 1144. Gold has also moved into a stronger price location. This is the major low back here in November 2015, and up to this subsequent high we've been following this halfway point in here, which is just about 115.50, and currently GLD is printing above that level, so this is stronger price location. Above the major at 119.84 would really confirm the strength and put it in a very strong price location. Currently we would call this level 119.84 resistance on this chart. Pre-open each day I follow the dollar index, and this week I've been talking about the resistance on this chart at 101. Which is the 6-month point of control. Said last week's video that there was obviously a multi-month point of control in there that we had to uncover as a resistance level. I said we'll be tracking that next week, and that's the level that we've actually reached today, as you can see on the chart, and you can see from the current price, which is just here, that has turned lower just on the day from that point. Now price back above that level would immediately put this chart into a stronger price location, and if the dollar is going to go stronger you wouldn't expect resistance at this point. That's what we're seeing currently, so I still have my doubts about strength in the dollar. We discussed all this last week and the previous week. Be very interested to see if the dollar index can print above 101 early next week. On the pound dollar chart, the level that we were following was 124.19, the 10-month point of control. That has actually just in the last day, I think, migrated higher. It's now the 15-month at 124.80, almost exactly where we're currently printing. I can see that the pound dollar has found that attractive level in time, and from the distribution pattern I can see why. So that's a perfect fit for the latest distribution at 124.80. Again, like the FTSE, could indicate that a directional move is imminent out of this trading range that we've been in for a few months. So critical now to watch price relative to this level, 124.80, a new reference level. On the dollar yen chart, as we've discussed before, this area down here was major support. That was probed 3 times, held nicely, and good for this bounce through here. From this high on the chart down to this low, halfway point comes in here, 112.47. Currently printing above that level, just currently having a little bit of difficulty with 113.61, which is the 4-month. So price above that level, 113.61, puts the dollar in a strong position against the yen. Price back below 112.47 immediately puts the chart in a weak position. So you can see the last 3 charts, the dollar yen, dollar index, the pound dollar chart, all printing very close to really important levels. That's also the case for the Aussie dollar. These 2 levels here, 4-year and the major point of control at spot 76.50. By definition is a very attractive level for the Aussie dollar, but if it's printing above that level, especially if we see a higher low, as I've mentioned before, would be a positive for the Australian dollar and gold most likely, and a negative for the US dollar. Finally, the Euro FX chart, just currently holding above its 7-month, which happens to correspond to the halfway point approximately from the January low here to the subsequent high. So price holding above that 7-month, strong position. Price back here, below here, weak position. Just using the 4 charts that we've just looked at, trying to assess general strength for the US dollar. Currently a very difficult call, to be honest, but what we do have is some very clear levels to monitor. If the charts in terms of their positions relative to those levels will start to line up one way or the other, we should get hopefully a pretty clear idea about strength or otherwise forthcoming for the dollar. Okay, last look at the spider. It looks like there's a good possibility we'll see a strong close above Monday to Wednesday's range that we always follow in the weekly structure. In the ebook, a pattern for a bullish market is relative strength early in the week, and relative weakness early in the week and relative strength at the end of the week, and that pattern, barring a sell-off of some degree before the close today, looks set to continue. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.